Mark Robinson claims Nvidia has a new $7 partner and says this stock could gain over 6,000%, just like previous Nvidia partners. I reveal the stock here for free so you don't have to buy Mark's newsletter. No paid or proprietary information is being shared. This is simply an educated guess based on clues from a publicly available sales presentation. Before we do anything, let's quickly look at Mark's track record. In January 2024, Mark recommended 3 stocks, and the first was TSMC. This was a great pick. TSMC took off shortly after. The second stock was ARM Holdings, and this stock has done very well as well and has almost doubled in 18 months. The third stock was Supermicro Computer, and this stock had a dramatic rise and fall, but is still up overall. In December 2024, Robinson recommended 3 more stocks, with the first being Palo Alto Networks. The stock has been volatile, but is essentially break-even. Vertiv was the second stock, and this one is down slightly. The third stock was Arista Networks, and this stock is down as well. Let's look at the new presentation from Robinson now and figure out the stock. It starts with Mark saying, Jensen Huang recently gave the keynote speech at the Consumer Electronics Show in Las Vegas. When the Nvidia CEO walked on stage, you could have heard a pin drop. The market hung on his every word, and he pulled back the curtain on a brand new technology, robots, built by Nvidia. Forbes says this could be a $24 trillion opportunity for investors. Huang said, the ChatGPT moment for robotics is right around the corner. In fact, I believe these robots could impact 65 million Americans' lives this year, and one stock, currently priced around $7, could be the biggest winner of all. Mark continues and says, in Las Vegas, the CEO of the world's most valuable company did more than just talk. He laid out his vision for building the world's first trillion-dollar robot, while explaining how a specific $7 stock is so important to that goal. I fully believe Huang's plan will be ready to go mainstream by August, if not sooner. And then he says, Nvidia needs the help of one $7 company. And then Mark says this robot isn't what you're thinking and claims, is not a humanoid robot like the one standing behind Huang at CES. It won't be able to make you a drink or clean your house. Honestly, it may never even go inside your home. And it won't go in a factory either. But it is going to help plenty of Americans just like you. It will add nearly 10 million jobs to the workforce, while giving the economy a yearly $1.2 trillion shot in the arm. How's that for a breakthrough? I expect this trillion-dollar robot to reach over 65 million American homes before this year is out. Huang says it's the largest technology industry the world has ever seen. And Bill Gates says it will be as revolutionary as the PC. And then Mark says, some of the biggest financial players see what's on the horizon and are rushing to get in on this groundbreaking robot. The top 3 venture capital firms in the world, Tiger Global Management, Sequoia Capital, and Andreessen Horowitz, are fully on board. Tiger and Sequoia combined to invest nearly $250 million in this project. These 2 VC firms know good value when they see it. They've consistently outperformed the market. Eventually, Mark explains the robots he's talking about while standing in San Francisco, and he's talking about driverless car technology. So that's the stock being pitched here, a $7 self-driving stock that Nvidia partnered with. There's only one company that fits these clues, and it's Aurora Innovation. However, the stock is down recently and is now a $5 stock. Aurora Innovation is a self-driving technology company founded in 2017 by veterans from Google, Tesla, and Uber. Its flagship product is the Aurora Driver, a Level 4 autonomous driving system designed to work in both freight trucks and passenger vehicles. The company is backed by major partners like Uber, PACCAR, Volvo, Toyota, and more. Headquartered in Pittsburgh and Mountain View, Aurora is aiming to lead the future of autonomous trucking and has been developing a commercially viable driverless system for years. In January 2025, Aurora made headlines when it announced a major strategic partnership with Nvidia and Continental. This deal centers around Nvidia's Drive Thor platform, a powerful automotive-grade chip that will serve as the compute engine behind the Aurora Driver. Production samples of Drive Thor are expected in the first half of 2025, with Continental slated to begin mass manufacturing in 2027. This includes a fail-operational backup system designed to meet safety-critical demands at scale. Here are the top 5 things to know about this stock, and after I'll tell you if I'd buy. Starting off, we have first to market, but forced to pump the brakes. Aurora Innovation made history in May 2025 as the first company to operate commercial driverless heavy-duty trucks on public roads in Texas. This first-mover advantage in autonomous trucking is significant, positioning them ahead of competitors like Waymo, which suspended its trucking division, and giving them real-world operational data that's invaluable for technology development. However, the celebration was short-lived. Just 3 weeks after launching their driverless commercial service, Aurora was forced to put human safety drivers back in the driver's seat at the request of their truck manufacturer, PACCAR. This reversal, attributed to certain prototype parts in the trucks, raises serious questions about the readiness of their technology and the confidence of their key partners. While Aurora maintains the technology is safe, this setback suggests the path to full autonomy may be bumpier than anticipated. Investment implication. Aurora has proven commercial viability but faces execution challenges that could delay widespread adoption and revenue scaling. Second is burning cash faster than a semi burns diesel. Aurora's financial situation is a tale of massive spending with minimal revenue. In the first quarter of 2025, the company reported just 0.25 million in revenue while posting a staggering 208 million net loss. Their annual cash burn rate of 637 million gives them approximately 22 months of runway with their current 1.2 billion cash position. The revenue trajectory is particularly concerning. Aurora's 2025 revenue forecast is only 5 million, a dramatic decline from the 68 million they generated in 2022. This suggests they're moving backward commercially despite technological advances. The company acknowledges they'll need to raise 650 to 850 million before achieving positive free cash flow, which they don't expect until 2028. Investment implication. Aurora needs significant additional funding to survive, which could heavily dilute existing shareholders, while profitability remains years away. Third is playing in a winner-take-most market. The autonomous trucking market presents enormous opportunities, with demonstrated cost savings of $200+ million annually for major customers like FedEx and operational improvements including 25% faster transit times and 30% cost reductions. Aurora has secured partnerships with industry giants including Nvidia, Continental, PACCAR, FedEx, Uber Freight, Volvo, and Toyota, positioning them well in this potentially trillion-dollar market. However, the competitive landscape is brutal. Several well-funded competitors have already failed or pivoted away from autonomous trucking, including Too Simple, now focused on gaming, Embark, massive layoffs, and even Google's Waymo suspended their trucking division. This suggests the market may be more challenging than initially anticipated, with high barriers to success and potential for significant consolidation. Investment implication. Aurora is well positioned in a massive market opportunity, but the high failure rate of competitors indicates this is an extremely risky, winner-take-most scenario. Fourth is executive exodus signals internal turbulence. Aurora has experienced significant leadership turnover that should concern investors. Co-founder and chief product officer Sterling Anderson left to join General Motors. General counsel Nolan Shanai departed at the start of 2025, and senior VP of engineering Yanbing Li left in August 2024 to join Datadog. This brain drain at the executive level suggests potential internal challenges or lack of confidence in the company's direction. Additionally, a short seller report by Bleecker Street Research claimed that Aurora hadn't obtained proper permission from PACCAR to commercialize their trucks, and that the manufacturer believes the technology needs more development time. While Aurora declined to comment on the report, the subsequent requirement to put drivers back in the seat lends credibility to these concerns. Investment implication. Leadership instability and partner concerns suggest deeper operational and strategic challenges that may not be fully reflected in public communications. Fifth is analysts bullish despite bearish fundamentals. Despite the operational setbacks and financial challenges, Wall Street analysts maintain a buy consensus rating on Aurora with a $10 price target, nearly double the current stock price of around 5.35. This optimism is based on Aurora's technological leadership, first mover advantage, and the massive total addressable market for autonomous trucking. However, this creates a significant disconnect between analyst expectations and current fundamentals. The stock has declined substantially from higher levels, and the company faces immediate challenges including the need for additional funding, regulatory uncertainties across different states, and the technical hurdles demonstrated by the recent safety driver requirement. Investment implication. There's significant upside potential if Aurora executes successfully, but the gap between analyst optimism and operational reality suggests high volatility and risk of disappointment. At the end of the day, Aurora is the epitome of a high-risk, high-reward stock. Autonomous trucking is still in its early days, and while Aurora was the first commercial company to hit the roads, they experienced setbacks and now require drivers in the trucks again. One of the biggest things that concerns me is that Waymo wasn't able to crack the autonomous trucking industry. Most people agree they're the top self-driving company right now, even edging out Tesla. Their cars are actively driving in many cities, and from what I've heard, they're really impressive. Waymo is owned by Alphabet and has essentially unlimited funding, so if they couldn't figure it out, that's concerning. Additionally, trucking is one of the largest industries in America, with revenues close to $1 trillion. It also employs the most people without a college degree and offers some of the highest salaries for those without one. So I imagine truckers are going to fight tooth and nail to prevent autonomous trucks from taking their jobs. The big corporations might win in the end, but I expect a fight at the very least. You might even see autonomous trucks destroyed by disenfranchised workers. Aurora is being hyped a lot. This is the third stock picker I've seen pitch the company. The last time was Mark Chaikin a month or two ago when the stock was $7. I said not to buy it then, and the stock has dropped to $5 now. I'm still not interested in the stock despite the drop. I need to see some actual tangible results before I'd consider buying. Right now, Aurora feels like all hopes and dreams, and I'm just not in the mood to invest in that. And don't forget to click the link in the description to check out Alpha Pick. Right now, they're running their biggest sale of all time, and you can get $100 off this amazing service. Remember, I've reviewed over 100 stock picking services, and this is the only one that consistently beats the market, nearly tripling the returns of the S&P since inception. So again, make sure to click the link in the description and get $100 off this incredible deal.